Hello everybody, this is Hari Swaminathan from OptionTiger.com. Welcome to the free video library, and in this video we are going to cover the topic of market internals. So what exactly is market internals? Market internals are a set of indicators available on most platforms, and it measures the internal strength of the markets. Now, you could use it in many time frames. You could use it on a daily chart, you could use it on a weekly chart, or even an intraday 5 minute, 15-minute chart. What it tries to measure these, and there are many indicators available. We're going to cover two of the most important ones. What it tries to measure is the breadth of the market strength. So, whether it's a down move or an up move, it doesn't matter. What you want to measure is how broad is this particular sentiment. If it's going down, then how broad is it, and or if it's going up, how broad, because the more broader the market strength is, the more likely that move is bound to persist. So, for example, you can use these indicators on any of the S&P 500 index, or the Russell 2000, or the Nasdaq, or the Dow Jones. So we'll be going into the Thinkorswim platform, and we'll be looking at these indicators. Now, you do want to choose the right index for the stock to compare. So, for example, if you're comparing, say, Google, Google is a Nasdaq stock. So you want to, if you're doing a comparison with Google, you want to compare it to the Nasdaq market internals. If you're trading, if you're planning to trade, let's say IBM, then you would want to compare it to the Dow Jones. So you want to choose the right index to compare the stock with. So market internals are a set of indicators. There are many available. We'll show you the two most important ones in this in the free course. And as always, all technical patterns always get trumped by fundamental news or events about the market, global events, or company specific news. So we always have to keep that in mind. So let's now go over to the Thinkorswim platform, and we're going to look at two particular market indicators. So one of the ones is, you want to know whether always volume is a good indicator to look at. So there are many stocks that will be moving up on any given day, and there are many stocks that will be moving down. So what is the difference between the up volume and the down volume? So if you're looking at the S&P 500, for example, out of the 500 stocks in the S&P, how many are moving up and how many are moving down? The other market internal indicator you can look at, that is the advancing issues minus the declining issues. So that gives you an indication of how strong the advance is in the market. Or if declining issues are much more, then you're obviously going to see a negative number. But the point is, you want to get the difference between the advancing issues and the declining issues. Similarly, of all the advancing issues, what is the volume? And of all the declining issues, what is the volume? So this gives you a very good indication of what the strength or what the breadth of the market is. How widespread is it across the index? Because the more widespread it is, the more stronger that trend is likely to be. Okay, so let's jump into the Thinkorswim platform, and we'll take a look at these indicators in action. On the Thinkorswim screen, I'm starting off with a blank chart here. So here we are. If you come here and if you pick these three, you can put three indicators. So the way we want to look at market internals is, as I'm going to show you, there's many indicators you can look at. But whatever you choose, you want to choose that with the appropriate index. So let's say we're choosing for simplistic purposes, the S&P 500. So you do want to choose the spider there. So one of the charts, you'll put it as a spider, and let's say we are doing an intraday analysis. So we're doing it for 1 day, and we'll do a 15-minute analysis here. So for simplicity's sake, let's say we are looking at an S&P 500 stock. So, it could be any, there's plenty, all of them, your IBM, Apple, Google, all of them are S&P 500. And so we're looking at the S&P 500 stock. So you do want to put the SPDR, the ETF, for that particular index onto one of your screens. Then what you want to do is you can compare the market internals of this particular market. So here, if you come to on the Thinkorswim platform, if you come and put a question mark and hit enter, it'll give you all these different parameters that you can put for your chart. Here we want to come to the indicators, and in the indicators you can come all the way. There's plenty of stuff here, you can take a look at it, but basically what we are interested in is the S&P 500 up volume minus down volume. So this gives you a very good indicator of market internal strength in terms of what the volume is. So this is for Friday. You can see that the market volume steadily decreases. So the volume of the declining issues is much more than the volume of the advancing issues. So you can see that the market internals are pretty bad, and it goes down all the way, and that happened because on Friday the markets were down. So you can see that. So at any time you can see that the market internals, are we going to see a turnaround here? As you can see, the SPDR, for example, it starts off at 9:30, makes a slight move up, but however it gets caught up, and even though the SPDR shows a bounce here, you can see that the bounce in the volume is not a whole lot. You're still at a negative 200,000 or 2 million rather, or 20 million. I'm not sure. There's too many zeros there. But regardless, it's a large negative number. So even when it's bouncing, the up volume minus down volume is still heavily negative. So that pressure exists on the breadth of the market, and so ultimately it starts going down again. Again, there's a slight bump up here. You can see that the S&P tries to recover. However, given that it's already 3 million or 30 million down, how sustainable is this up move going to be? Obviously not a whole lot, because you would want to see the up volume minus the down volume really come up, and it's way below the zero line. So it's already under a lot of pressure, and it has to overcome this pressure before it can even come to the zero line. So obviously, it doesn't work out, and then you can see the S&P goes down for the rest of the day as well. Finally, in the end, there's a little bit of a bump, but that's the last few minutes anyway. So, but you can see that even in the last few minutes, the volume of the declining issues was much more than the volume of the advancing issues. So even though this shows a little bump on the last 15-minute bar here, in terms of market internals, it's actually weakening. It actually weakened even more. In fact, it hit the low of that day on the final 15-minute bar. So the volume, the difference in the volume can give you some very good insights as to, okay, is the market going to recover? It started off negative, but is it going to recover? How likely is it going to recover? You can see the up volume minus down volume, and very soon when it hits this, and the declining issues start taking over again, you know that this thing is probably going to roll over again, and that's exactly what it does. And each time it tries to make a comeback, you can see the S&P is trying to make a comeback, but each time it makes a comeback, the declining issues take over again, and so it's going to go down into another leg. So this is an important intraday indicator. You could use it for other time frames as well. You can use it on a daily chart. It's the same. However, all technical patterns, of course, are dictated by, or rather, they are trumped by fundamental events and news. So you always have to keep that in mind. So this is the first market internal indicator that you can look at. The second one is more simpler. It is just the plain advancing issues minus declining issues. So if you're looking at the S&P 500, out of the 500 stocks, how many are advancing and how many are declining? So that also gives you a good idea about the market internal strength. because the more issues that are advancing, obviously then you're going to see a bullish trend for the day. And conversely, the more declining issues you see, you're going to see a bearish trend for the day. So let's go ahead and pull up that indicator as well. So advancing issues minus declining. Here you can see, so on this you'll see that it has for all the different indices. So let's say you were doing Google, then you would want to compare the Nasdaq. So you would want to use this signal. In our case, we are still using the S&P. So let's just go at here you can see the advancing issue, the S&P 500, advancing issues minus declining issues difference. So that's what we want to see on a 15-minute basis. So here, if we see that, again, we see that the first few minutes there was some kind of a spike. Actually, it's not a spike, it's a negative number. So it starts off deep negative. It tries to recover, but it never comes to the zero line. The zero line is not even seen. The zero line is above this. We start at minus 100. So obviously the market started off fairly weak, and then it continues the weakness. It tries to make some kind of a recovery. You can see the spider also tries to make some kind of a recovery. So here we can see that the S&P tried to make its high around 10:15 in the morning. That was actually the high of the day. Let's go ahead and take a look at what this high is. Not surprisingly, it's again at 10:15. So at 10:15 in the morning, it tries to make a high. After that, the declining issues start really taking over. So you can see that the market goes all the way down. There's a slight recovery here also. But again, if you're looking at the up volume minus down volume, and you're looking at this, that at some point this is the declines are taking over. Here it's very clear that the declines are taking over, and so is it over here. So you can use these indicators to if you're dealing with an intraday trade, or at least to know what's happening on that particular day. You can use these market internal indicators. They're very important, and most importantly, you want to make sure you're comparing it to the right index. So if you have a trade on Google, for example, you would want to compare it to the Nasdaq. So here, let's go back and do the Nasdaq, the advancing issues. Here we go. You can use the Nasdaq 100 index itself, do an advance minus decline on that, because Google is part of the Nasdaq 100 index, and so you can see how Google might perform. Because bear in mind, all of these stocks, especially the major ones, they are all highly correlated to the market. So whatever the overall market is doing, and whatever the index in which that stock belongs is doing, is probably what the stock is also going to do, unless of course that particular stock has some kind of fundamental news or something going on with it on that particular day. But if there's no such news or event, most stocks will mimic the index that they are in. So that's important to always keep in mind. So that's it about the market internals. There are many indicators you can look at. These are two of the most important ones, the volume and the advancing and declining issues. If you have any questions, please send us an email at info@optiontiger.com. Thank you.